It's about 2-3 more minutes and we'll get it started. If the recording up and ready, we're good to go. Two more minutes. About a minute or so. Best people to join, we'll be good to go. Alright, I'm gonna go ahead and get this started. Appreciate everyone who is joining here for some more educational content. This is going to be a grind process with me. Getting on these charts, right, reading these candlesticks, and giving you guys the same comfortability and sustainability to be able to read the same candlesticks that I am reading and be able to understand what charts I am posting and charts you guys are posting back and forth, right? And get into this mindset of how every single type of analysis, every single strategy, quote unquote, strategy that traders go after when they're looking at certain charts, right, candlesticks, can all be looked at as the same from a different perspective, right? The market is still moving how the market is moving, but all of these traders are using, whether it's indicators or certain strategies, right, macros, whatever they're using to trade these markets, they are using these strategies, right, to predict where price is going to go next versus where we are going to look for a certain clue, right, a certain footprint telling us that the market wants to go a certain way, and then using confirmations we can then get into certain trades. We're going to talk today about key factors to sustaining a profitable account that I believe are just simple little key psychological tools that can help you guys with trading just in general. We're going to get a deep look into this certain range right here that I have drawn with GBP JPY. We are going to talk about how we can make this simple as far as breaks of structures go, as far as a certain market structure perspective, because we understand that price isn't going to move just like this, making just higher lows, higher highs, higher lows, higher highs over and over. Obviously, that would be too simple. I'm going to buy this every single time. I'm going to go make a bot that buys this every single time, right? Whether it's a fib extension, versus this impulsive move right here, right? However it is, price is not going to move like this always, right? We need to look for that certain clue that shows us this move right here so we can find that impulsive move, that break of structure, and then look for areas higher in the range to take our trade. Obviously, vice versa is going to go for the opposite side. So when we get a look into our range, first we're going to talk about the key factors, but when we get a look into our range, I want you to keep this in mind that price isn't going to look like this, right? We're going to get something, and we talked about this in last stream, where price is going to look something like an accumulation, right? Price breaks out, rally-based rally, price moves higher, we see a distribution, maybe a drop-based drop, price moves lower, maybe fills imbalances, doesn't fill demand over there, accumulates more, moves up, right? We see a lower high formed, price moves lower into demand, and then we see higher prices overall. Right, we don't get that clean higher high, higher low price action, especially with candlesticks when we're reading these candlesticks, right? So we need to get a clear, simplistic understanding of what we're looking for, and that's what we're going to go over today. So, what I wanted to talk about first, right, are the key factors that I believe are sustaining a profitable account. Now, there's just two of them. Just going to keep it nice and simple. I just want you guys to understand that the only thing that we can control in this game, in this job, right, in this market is our risk. I can control how much margin I put on a trade, and I can control my stop loss, right, how much I am willing to lose in a certain situation. So we need to understand that one, I can't control where this candle is going to go. I can't control where the market is going to go. I need to only look, right, for clues that tell me that the market wants to move a certain way. So understanding that we can only control our risk management, right? And understand too, this is a math game. So this is something that I had seen. I believe it was a MentFX video. I don't know who he quoted that had talked about this, but he drew out a certain student's profit P&L, right? It looks something similar to this. And just imagine your P&L is similar, right? Maybe you're going up, right? Having a good day, and then you have a sharp break, and you're at this point in time, right? And let's say this is over a certain number of years. So let's say you have lost a lot of money on this move right here. This is your overall P&L. And this is the point to where you're like, I'm quitting, right? This is years and years and years of buildup, and I've just lost it in a month, 2 months, however it is, over trading, whatever you were doing, right? You have lost this capital, and now you're at this point, this psychological point in your mind where you're saying, I'm done. I can't ever get this back, or how am I going to make this back, right? I don't want to revenge trade. How am I going to do this? Well, what he drew out and what interested me the most, right, was he said, let's take this into perspective and let's think of this as a math game, right? Let's say you had this big loss, and let's say this was due to overtrading, or let's say this was due to you not following your risk management. So let's say you did not have a stop loss, and this was the cause of that, right? This is your P&L because you did not follow your rules, okay? So now you're at this point in time where you either want to quit, whatever it is, right? We need to understand that if we can manage our risk, right? If I can stick to my plan every single time until I am proven wrong, over time, what if I take this, right? This same exact thing and draw exactly what we had before? Now, a lot of you, right, might have looked at this first part and looked at this and said, "This isn't profitable." But now, if I take this entire um, this entire P&L, right, over however many years it was, and I put it into perspective and I draw out the same exact thing, would you look at this and say it's profitable, right? That's what he drew out, and that's what was very eye opening to me. And what it really is, right, is it's the numbers game. You can beat it with math, right? You can beat it by managing risk. We have people out there trading breakouts, support and resistance strategies, right? Getting funded by FTMO because they understand that if they manage risk and they're only looking for 2.5% a week, right? 1% a day, 2% a day, because that exponentially grows, then they can get into a profitable mindset and a healthy mindset and understand that they're only looking for one thing over and over again, right? Now it's just a plan, and now it's become a job, and now it's quote unquote easy, right? It's become simplistic because you have put in all this work, done this plan, and understood that over time, because you have not given up, right, and followed your plan and followed your strategy, you easily have a profitable system, and that is what is shown here. So understanding that we can't control the market and understanding that we can control our risk is one of the biggest factors that can help us at being profitable in this market. Now, we're going to get into GBP JPY, And I wanted you to understand, we talked about the higher highs and higher lows. We don't want to have that certain mindset when we are looking at these charts. And the reasoning for that, right, is because we end up getting into this quote unquote uninformed dumb money perspective where we're looking for the most immediate break of structure downside or something similar, and we end up getting stopped out of trades before the actual move ends up presenting itself in our direction. Now, we're going to look at GBP-JPY, and I want you to understand this is a 4-hour chart, why this range was drawn, and before this range was drawn. So at this point in time, let's go to a higher time frame, and not even just looking at this chart, right? On a daily time frame, we have obviously taken a high that has created a low. An impulsive move was formed from that, and we can see that price has filled all of these efficiencies on the way. So we can see that everything has been taken care of, right, on this entire move up. This is on a daily time frame. If I go to a 12-hour time frame, we can see that same exact thing. Overall, we are in bullish market structure, higher high, higher low, higher high, possible higher low. We need to confirm that with a daily breakup structure, right? And then the 4-hour to show the same exact thing. So the daily has shown that. Now, if we are looking at our 4-hour time frame, we can see that prices came down, right? We see an impulsive move right here, an area of accumulation, that demand zone, right, that had caused this high right here out of the range. Yes, if we take out this high right here, and we can obviously expect higher prices if price can continue to create higher highs, higher lows, respect demand, and take out this liquidity, keep drawing to liquidity from our overall bullish bias. Now, we are looking at our most immediate structure. We understood that everything was taken care of. We can see all of these wicks are being filled on the way up, so price has been filling these efficiencies on the way up. We are looking for our most recent structure. I see an imbalance right here, right? We have an impulsive move that breaks structure. We are on a 4-hour time frame, so we're looking at body closures. So this candle closes over this, and we can see that we have created an impulsive move with imbalance, so I now have a range created to look to possibly trade within. Now, understanding that price came up into these areas, right, into these areas of supply, took out these highs, rated liquidity. From that, we saw this low that caused this high be taken out with this displacement candle to the downside right here. Now, if we are looking at our immediate structure, looking at our supply and demand within that, we can see that price broke structure to the downside here. We have a supply candle from that, an area of displacement. So if we are marking out our imbalance from this candle to the downside right here, price broke to the downside right here. So this candle before the candle that broke structure to the downside. And then if we are doing the opposite, right, for the demand zone that we are looking for, we can see that price accumulated. We can see price made a move upside, created some sell side liquidity. So this was our first initial break of structure to the upside here. We have an imbalance that was created right here, as well as sell side liquidity. So this is showing me, right, if we're going on our lower time frame, we can see areas, right, institutional candles, the last sell before buy candle, after a liquidity rate that broke structure to the upside, showing the demand was in play. If I go to a 5-minute time frame, we will probably see some type of accumulation within this zone. Or even go to a 1-minute time frame. You can see price came down, accumulated, took out lows from that, made that imbalance, right? And we can see price moved higher. So now, going back to our higher time frames, Noticing that price came up, came down, created that buy side liquidity on the way down, manipulated the lows, manipulated its last low. We got our break of structure, and this is where it's most important, right? Because we're looking for, and I want to make this as simplistic as possible because some people are calling this the market maker M's and W's, right? MentsFX calls this double break of structure, but this is going to basically confirm us that there's institutional sponsorship within the market. Now, literally, M's and W's, what this is going to be, right? The W is going to show that accumulation, and then the M is going to show that distribution, that supply introduction. So, in this sense, right, we are looking at structure coming down, trading higher lows, higher highs. We get the first break of structure, and then we get a second break of structure. This indicates that demand is in the market. We get an impulsive move with imbalance. We look for an area of demand in this case, and then we look for a price to come back down into that area. And from that, we can see that continuation. For the M, we want to see the first break of structure to the downside here. We want to see price either respect this high or come up, raid liquidity, and then again break structure to the downside here. This can be the same here, right, where this W comes down, ends up raiding liquidity here. It can look different. It's not going to look specifically like this M or specifically like this W, right? So we want to see, right, price show that first initial break of structure. So we'll see price come up, have a rally-based rally, come up like this, break structure to the downside here. We want to look for a price to either respect that high or raid liquidity and then show that supply introduction with another displacement. So we want to see displacement within this move right here as well as this move right here. Same thing goes for this move right here as well as this move right here. And we want to see these coming after liquidity raids. So let me go ahead and take all this off and show you exactly what I mean. And also, to reiterate on this, for the accumulation and distribution, that's what those M's and W's are as well. So if we look on a higher time frame, right, our W pattern that we are looking at might or will end up looking on a lower time frame like an accumulation, right? Prices coming down, creating highs, that buy side liquidity, rating highs, creates a redistribution, comes down, takes out the lows. Then we see that spring, right, comes down, reaccumulates, and then we see higher prices out of the range, reaccumulates, that rally-based rally is formed, and then we see that continuation to the upside. Now that is going to be for our W's, and then for our M's, right? So for our W in this case, looking at something like this, then we want to see either price come down to these areas, right? Actually, it's going to be over here more. We'll show it on the charts in a second. But for the accumulation, that's going to be our W's that we're looking for. For the distribution, that will be our M's. Now, in this case, right, and we'll just go to replay mode in this situation to show what I mean. So we're looking for our first break. We actually get a break right here of a high that caused a new low. On lower time frames, this is a 15-minute, but at this point in time, we need an hourly break of structure, right? So we are looking for the hourly to break upside from this high that caused this low right here, right? Prices making lower highs, lower lows, as is coming down to tap into areas of demand, fill imbalances from these candles right here. We see price get that break of structure upside, price comes down, creates sell side liquidity. That tells us, right, that there are early longs getting into the market. We are starting to take out shorts of this range right here, as well as there are early longs getting into the market. We are mitigating supply over in these areas. We get that first move right there, and then we get price to come into these areas right here. And then from that, right, we start to see that accumulation and price move higher. So the second, right, break of structure came from this high right here on the lower time frames, and I'll show you this right here. The 15-minute, we have our institutional candle, right, that last sell before buy candle. Following a liquidity raid that broke structure to the upside shows introduction of demand. Price comes down into these areas. We are looking for now this high to be taken out. So our structure is looking like this. We want to see this high taken out to show that demand introduction, and we are looking for these areas over here. We see that high get taken out, right? Now we have an area of demand, as well as an hourly break of structure to the upside to confirm our higher time frame, right? 4-hour bullish trend. So we can now target the overall high. But we understand that that sell side liquidity is being built, so we are not FOMOing any longs at this point in time or longing these demand zones, right? This is someone getting into trades right here, finding any demand zone that they can, maybe an institutional candle down here, whatever they are looking for, right? For price to continue higher after making this next higher low, right? Because they are looking for this. Higher high, higher low, higher high, higher low, higher high, higher low, right? But we understand that liquidity needs to be rated for the introduction of demand or supply for the continuation of price. Now this is very important too, because as price comes up into these areas, we are understanding that it also creates some buy-side liquidity. So now I have a move right here. I'm looking for a higher low, and then I'm looking for a continuation to the upside. And now I have liquidity. So if price can come down into these areas, raid this liquidity, take out all of the early longs, right? Shorts are going to be getting into trades. Maybe they see a bear flag, whatever it is, when price comes down into these areas. We understand that price is just filling these inefficiencies, going to tap this institutional candle, and then move higher from that. Look for these areas of buy-side liquidity, and then these areas overall. So we have our first target, right, and our second target. This is just that higher time frame trend. I'm targeting now the weak high, right, that was created from this strong low. So we have a strong low right here, weak high right here. We are looking for that weak high to be taken out, so that's what we'll be targeting if price can come into those areas, which we end up tapping into those areas. And this is important too, because we can see a drop base drop that was formed, right? That redistribution that was formed to raid liquidity to the downside and tap into our institutional candle was immediately violated. We have another demand zone that is formed, right? That candle before the candle that broke structure to the upside. So now we can expect price to respect this demand zone, possibly come down, fill inefficiencies, maybe even tap into this institutional candle and continue to the upside. When your quote unquote zone doesn't work, right? When we understand as institutional traders that we have a demand zone or a supply zone, we understand that these areas can be absorbed. Now, what does this mean? This means when price is moving, let's say you have a zone like this. Let's say there's an impulsive move to the upside right here, and you have a demand zone that is marked out from this move over here. So let me go ahead and drag that over. Looking just like this. You're watching price come down into these areas. Maybe it makes a redistribution right here, and then comes down, starts to show some liquidity, but then you see it go underneath these lows right here. And you're like, well, my zone's validated, it's over, it's done. And then you go check back an hour later and price has done this. And you're like, what happened? Like, what happened to my demand zone or my supply zone? Right? We understand as institutional traders where those liquidity rates can be present, and we understand that liquidity is held at every single high and every single low. Just because we have a demand zone, just because I put a block on a chart, on a virtual chart, right, doesn't mean price is going to respect that. The market will move how the market wants to move. So we want to see these zones absorbed liquidity rated within them, accumulation and or some type of Wyckoff, right, within our zones for that confirmation, those M's and those W's, and then we can see that confirmation and that continuation. And for that, we can be able to start to catch these trades and not be left behind and or FOMO into anything too early. So we want to see price respect this demand zone, right? Possibly reaccumulate, make some more demand, taking out the lows, leaving highs, leaving buy side liquidity. And our first target, right, is going to be this week high right here. Second, that overall high right here. Or you can be taking partials, right, on lower time frames at these zones of supply, depending on however you are risking. We're looking for the continuation. We are seeing a new high that is formed following a liquidity raid to the downside. We see another liquidity raid to the downside here. So price came up, rated liquidity, showed this bearish engulfing right candle right here. Got shorts to FOMO into this range right here. Rated this liquidity to the downside. We're looking for higher prices overall still because we know that price is respecting demand from this low that caused this new high. Now we see that continuation, right? Our first partial is taken right here. We have stops at break even. We have actually stops at break even after price breaks this high right here, and then creates another high to show us that overall we are in a bullish scenario and we have caught the actual higher low. Now we wait for price to play out. It shows an impulsive move, right? Our next range is created. And from that, we can look to go to our next trade. So now that our next range is created, we see a new impulsive move. And then we are now looking for areas, right, of demand and supply to possibly look to trade this within. We can see an institutional candle here with imbalances right here. So possibly some demand within this zone. We could possibly come accumulate here, maybe make a lower high, continue to the downside, or come into this demand zone right here, accumulate, and then continue to the upside. We will have to see what happens, right? So we are looking for our next demand zone. We are looking for our high that caused a new low to be broken, right? We get our next break of structure right here with a candle that leaves imbalance. Remember, we are looking for our imbalance, that displacement, to show us that price wants to move a certain way. And we now have a candle before candle that broke structure to the upside for our demand zone. If we want to refine this on lower time frames, we can go ahead and do so. So to the 15-minute, right, we have our demand zone. We're looking for, again, the candle before that candle that broke structure, the most recent one right here, right? We see this imbalance that was created. We can now either refine this to just this wick right here from this candle, or we can look for areas lower down here. I'm just going to use the entire demand zone, right, because we want to have that lower time frame confirmation when we come into those areas. So now we are on our 4-hour time frame. We have our impulsive move. We have our range that was created. And then we start to see this displacement after a liquidity raid to the upside over here in mitigation of supply. Let's let price play out, right? We see that break of structure to the downside. We have that supply zone, that imbalance that was formed from this displacement candle to the downside. If we are looking right for our institutional candle, our last sell before buy candle following a liquidity raid and a break of structure, we have a candle up here that now gives us, right, an overall bias for where we want to possibly be looking to trade. So now in this scenario, right, I would want to see price accumulate and then come up into these areas, leave some sell side liquidity below as a target, right, and then tap into these areas from this high that caused a low internally, break structure to the downside, and then from that tap into these areas of demand. So now we see, right, that sell side liquidity formed if we are on lower time frames. Let me go ahead and even show you this right here. This was our most recent area of demand, right? We saw this reaccumulation right here. The broke into the downside with displacement, right? We have areas of supply, institutional candles higher within the range that we are looking to take price possibly to the downside internally if price can respect these areas of demand. Now the candle before the candle that broke this structure point to the upside, right, lies right here. So we can see price came into that zone, right, rated liquidity to the downside, actually respected this low right here. That sponsored this move. So if I was on lower time frames, we can see, right, that accumulation that sponsored this move higher. So we have a demand zone right here. But at this point in time, we are looking at our structure, our internal. So to pull back, right, our hourly time frame, for an hourly pullback, we need a 15-minute break of structure to the upside within this scenario. So we are looking for a high that caused a new low on the 15-minute to be moved to the upside for that continuation, right? At this point in time, this is our new high that caused a new low. We are looking for a break of structure. We see price break structure to the upside right here. We now have, right, again, that imbalance that was formed within these areas right here if I'm on lower time frames. To show it on my 5-minute time frame, right, I have a candle right here that shows my first move to the upside, second move to the upside with impulse comes right here. From this, right, impulsive move to the upside, that breaks structure, we start to see a reaccumulation that is formed, and then we get higher prices overall. From that, I now have an area of accumulation, right, with that imbalance. We saw it came into that, and then we are looking for higher prices overall. Now, if we play this out, price comes back down, takes out that sell side liquidity. We have that demand zone with that area of imbalance that we talked about that price traded into. And now we are seeing prices moving higher overall. So if you are looking for long positions, this is a very valid entry. And then as prices starting to come up, we are starting to create some buy side liquidity, right? We can see early shorts getting into trades as well as early longs getting into trades right here, understanding where our equal highs and equal lows are. Now see price come into these areas of supply, these institutional candles. So if we were playing limits, which this is an unconfirmed trade, right, and we are looking to do refinements within these zones, we can see this candle was the candle before the candle that broke structure to the downside here. So on lower time frames, we can now refine our supply zone even smaller, right? Or if you wanted to look for institutional candles higher on lower time frames, that is completely up to you, right? I'm not going to be looking to play limits. I'm just going to be looking to play the overall trend. So now that we have a quote-unquote hourly breaker structure to the downside, we need to confirm this with now the 15-minute to look to take trades to the downside. So now we are looking for a low that caused a new high to break structure to the downside. We get one right here. We see price still creating, right, sell side liquidity. It has still not violated this low right here, but it ends up starting to show some type of displacement right here. We get a low that caused a new high internally, broken to the downside. We want to see now this broken to the downside with displacement, right, to show us that same exact thing. What happens? Price comes higher, ends up rating liquidity, right, taking out the highs. So just like we were talking about before, right, that absorption of demand or supply, because what happens directly after? We see price come into these areas, right, and then immediately break structure to the downside right here after price pushes up. So it raised liquidity to the upside, takes out all of these buy stops right here, takes out all of these buy stops right here, mitigates areas of supply over here. So if we look, we can see an imbalance that was left behind right here, area of supply on lower time frames from a high that caused a new low. You can see that price mitigates that. And then we get our first, 15-minute structure break to the downside right here. Now that I have an area to look for, I can look for the candle before the candle that broke structure to the downside, or look to play the continuation. Now, that we get that liquidity rate to the upside, move to the downside, we are looking for price to respect that. What happens? Price takes out that supply. That's completely fine, because how do we trade, We are looking for the 5-minute confirmation. If you notice, once price comes into this zone, it does not make any higher lows or higher highs that are violated with any type of strength. Instead, this higher low is broken right here, and we now have a new area of supply following a liquidity rate. So now that all of the early shorts are taken out of the market, price has broken structure to the downside, and we are looking for that introduction. So now that we have liquidity available, as well as supply available, in the institutional candle right here. And on lower time frames, if we are looking in these zones, we have institutional candles here, price break structure to the downside here, area of supply falls within here. This wick, is fractal lower time frame supply. If price can respect this high that made this new low, continue to break structure to the downside, then I'm going to be looking for an institutional candle, an area of supply over here, following this break of structure to the downside wherever that supply is created, or where price sponsors that. However price starts to play out, I want to see this low broken right here. Now I'm on the 15-minute, We get that 15-minute break of structure downside. We're looking for that 15-minute confirmation, but we can also look for the 5, coming into these areas of supply. So if you're looking to play limits, which this is unconfirmed, price could easily continue to the upside. You could look for something possibly like this, maybe in the 50% of the zone or in the 50% of discount, however you're looking to take this trade. But right now we are just understanding this as a low that caused a new high, broke into the downside, and then we are looking for that continuation. So now price comes into those areas, We see this high causes a low is broken right here. Buy side liquidity is formed. We have an area of an institutional candle that is formed here as well. We see after that is it, Price continues to move to the downside. It's not showing very much displacement at this point in time, so I'm not super interested in the continuation, and price could easily continue higher, and take out this buy side liquidity that was formed here. I do not know, but we are still playing the structure. However it forms is how it forms. Price comes back up into these areas, ends up continuously respecting these highs that cause new lows, comes down into this internal area of demand that causes an internal high. From that, we see some displacement, We see price continually raid liquidity to the upside, but it's still within our range. It has not violated this high, and it has not violated this low yet. So all it is doing within this range is creating liquidity. What happens? It raids liquidity. From that, we get that move to the downside, and we get that continuation to the downside. And now a new area of displacement is present. And now that distribution that we were talking about, this, this M that we were talking about is now present. That market maker distribution, that M is now shown. That distribution, the introduction of supply following liquidity raise, which I just showed you, which we just went through on lower time frames, was shown right here on all of this lower time frame price action. So now that we have those breaker structures to the downside, we now have an institutional candle, an area of supply that we are looking to now take this continually to the downside. We are now looking right to get in shorts. If we are on lower time frames, we can find those lower time frame places, right? But price has also created a lot of buy side liquidity. So understanding that liquidity is present, but it does not have to be rated, and it does not mean a reversal will form, is very, very important. Because at this point in time, a lot of you might look at this, and I even looked at this too, right? As this was playing out and said, well, there's a lot of highs, right? Is price going to go take out those highs before it continues to the downside? Nothing can tell. We can't tell you that, right? But we can tell you that our system was formed, our plan was formed, we got our breaks of structures to the downside. From that, right? Exactly, we got our rates to the upside. So if we are on lower time frames, playing the 5-minute structure, coming into these areas, we saw that we never broke structure to the downside. So as long as we respect, right, this high that caused this new low, maybe we raid liquidity, whatever it is, if we can introduce that supply, because we can see this unhealthy price action that is being formed on the way up, then we are still looking for lower prices. What happens, right? Price raids that liquidity, and then from that we see that continuation to the downside. So our original move that is shown, right, is formed, and then we get another displacement candle to the downside. But that first, right, show right here was where those early sellers got taken out. So the limits that we had placed would have been taken out, right? Which is why I don't look for those limits. I look for the 5-minute confirmation following the 15-minute structure to the downside. But this has still shown me, right, that overall, that distribution M was formed. So now supply was introduced. I am looking into these areas to the downside right here, right, for that continuation. What ends up happening? We get that continuation to the downside. We now have areas of liquidity down here we can target, or overall, we can target the demand zone. So now we have a displacement candle that was formed, an area of distribution that was formed as well, more supply. We are looking for price, right, to respect that and continuously move to the downside. Let's understand where our liquidity is. So we have our range. We are in premium still. We are finding our liquidity as well as our demand. We saw our move to the upside here. Saw how we could have caught the trade to the upside right here. So let's show this. Right? W is present. Where is your trade opportunity? Exactly what we talked about. Right here. You now have a trade opportunity within the W. Where's your trade opportunity within the M? Up here, right? On lower time frames, obviously, we rated liquidity, but if you had minute charts, you would still be able to catch trades within these areas. But now we see that supply was formed. We are looking for that supply, right, to be respected now that we have a displacement candle. So if we were looking for shorts within these areas, we'd look for something like this. But now that we have, right, that overall break of structure to the downside, and that, so let's do our higher time frame to lower time frame analysis within this scenario. But now that we have our higher time frame break of structure to the downside, as well as supply introduction, right, following a liquidity raid, displacement candle, same exact thing we are looking for over here. We are now looking for another continuation. So I want to see an M like this, to show me another break of structure to the downside, to show me that price possibly wants to move down to these areas because I have demand over here. But at this point in time, right, if I'm on the hourly chart, we can see we got an hourly break of structure to the downside. So the 15-minute structure was bullish on the way back up. We got one wick to the downside right here. That shows a possible break of structure. We are looking for the continuation. We get that continuation right here. Where's your candle before the candle that breaks structure to the downside? Right here, right? Actually, let's do the pips. But you have your first break right here to the downside from this low that causes this new high. Then you get your second break right here. You're looking for your area of supply. You're looking for these highs to be respected and for the continuation to then the downside. So you now have an area, right? We see price rate liquidity. Again, it is ranging. If we are looking for lower time frame confirmations, right, we need to see highs that cause new lows. But as long as price is respecting this high here, right, even on the wick, we need to understand that this is fractal. If it is respecting this high that caused this low right here, we saw our break of structures, right, our impulsive moves to the downside, price came up and rated liquidity, but at the same time, it is still respecting this high right here. We can look for price to continue lower to the downside, because what did we receive right here? Again, that break of structure to the downside, even though it looked like a liquidity possible break of structure to the upside. This high still caused this new low, and we have our displacement introduction here. So now that price, right, receives that 5-minute break of structure to the downside after coming into these areas, I now have an institutional candle and a zone to look to possibly take this trade off of. I can go to my 1-minute time frame, look for my 1-minute structure to break downside, to possibly get into this trade at this point in time, because I've received my 15-minute. So we received our hourly here, 15-minute here, looking for, or we received our 5-minute here with this move right here. My minute structure is still bullish on the way up to these areas. I received a displacement to the downside. I'm looking for the break of structure. Do we get it? Yes, we do. So now I have a distribution candle on the 1-minute time frame, right? Right here, institutional candle. Sorry, that we are looking to take this trade to the downside. Price could easily continue to the upside from this low that caused this high right here. That is completely fine with me, right? I'm looking to risk this. Take this to lower time frame demand zones. Because 15-second confirmation, right, could not be there, or it could. We will see how this plays out. So it comes into that zone, right? We got the minute structure break to the downside. So if we want to look at our M here, we can see this low right here that rated liquidity to the downside. Price came down, created that sell side liquidity. So internal structure, right, was broken to the downside here. If I'm on the, I hope it shows me the 15-second. Okay, it does. It does. Perfect. Okay, so these lows that cause highs right here, we see this displacement that was formed, and we see breaks of structures to the downside. Now, I don't want you guys to get confused when I show these second charts, because it is the same exact behavior that we are looking for on the higher time frames as well as the lower time frames. It will be the same exact thing. So price comes down, right? Shows a possible break of structure to the downside right here. We need a lower high to confirm that, right? Price comes back up into these areas, ends up rating liquidity to the upside, and then breaking structure with displacement to the downside. What is present? Our M, right? That same exact thing we are talking about. MentFX calls this a double break of structure because you see your first break of structure here, and then you get your second, right? That confirmation with this move right here, that breaks structure. But now, right, we can see this as the M or the W, market maker M, distribution, or accumulation. It's just a simplistic way, right, that we can look at these charts from a quote unquote robotic perspective and not get these emotions, right, that are going to have us FOMOing into this move right here or FOMOing into this move right here. Even though obviously the R&R could still be nice within the scenario because we're on a 30-second chart, right? But we can see that even after we saw the same thing here, price made or liquidated a low right here. If I was on the, I hope it shows the 15. Yes, it does. Delete this. Okay, here we go right here, right? We can see price creates buy-side liquidity, raids that, break structure to the downside, again, raids it, break structure to the downside right here. Where's your candle? Where's the candle that broke structure to the downside? On the 15 seconds, right here. And then again, you have another right trade opportunity that is presented after you have your minute structure to now your 15-second structure. And then now, right, you have this very, very profitable opportunity targeting that higher time frame demand zone on the 4 hour. From the 4 hour to the 1 minute, you have a 56 to 1 opportunity looking for that overall objective point, right? What happens? Your 4 hour objective point is reached. That 4 hour demand zone that we had, as well as the 1 hour demand zone that we had. You are out of your trade, right? If you're in this trade, you got a 15 to 1, 4 to 1, and then you ended up getting a 56 to 1 just by waiting for the final confirmation, right? If you're on the 1 minute time frame, which I'm going to show the 1 minute risk to reward because I understand that everyone does not have these seconds. But right, we end up getting a 19 to 1 on a counter trend trade using our higher time frame to lower time frame confirmation, right, to get that final continuation to the downside. Even though it was counter trend, we still caught a huge move, right? What was wrong with that? Nothing at all. Everything was shown. Our M's and W's were shown, right? And then from that, we got that entire move to the downside. So we're going to go ahead and take a look at Bitcoin and ETH now. I just wanted to show you guys that if there's any questions or anything like that as far as these go, feel free to hit me up in chat, send me some charts, so I can go ahead and go over these with you. But just make it simple, right? These smart money concepts and everything that I'm going through is going to be, it's going to be grinding, right? It's going to be boring, but it needs to be boring. Make it boring, right? Don't make it to where you're thinking about the money 24/7. Make it boring so then you can be able to look for the same thing over and over again. And then all of a sudden, right, you now have a time frame that you can set out that you can trade every single day. And now all of a sudden you're only on the charts for 30 minutes a day. And now all of a sudden, right, you're making all of this money only doing this for 2 hours a day. And you can go do anything you want, right, in your freedom and in your free time, right? So I just want you guys to make it simple and to look for that digital footprint, right? And not try to get manipulated with these candles because we're understanding that price has objectives. We're looking for the areas of imbalance, areas that price can deliver, and then we are confirming that with market structure, right? And supply and demand confirmation. And then we get those distributions and accumulations, those M's and W's, double market structure breaks, whatever you want to call it, right? So we're going to go ahead and look at Bitcoin and ETH. But like I was saying, just make it simple. I wanted to talk about shorts and why people were shorting this, right? So looking at Bitcoin and understanding our higher time frame, right, narrative we had at this point in time when price came into these areas, bearish structure overall. So obviously we're going to get, right, FOMO shorts from retail traders, from the uninformed money on any down move to the downside, thinking that everything that is occurring here, everything that has occurred here, is going to continue, right? They are predicting tops and they're predicting bottoms. We look for the confirmation from the pricing structures, right? So then we can know exactly where price wants to be. That was shown once price came into these areas, right? Broke structure to the upside, and then again broke structure to the upside right here. So if we are looking for now our W, right? Our area of demand, that same exact thing. What happens? Continuation to the upside. Price never broke this low. That caused this new high. Our W was present, showed that institutional presentation as well. And then from that, we got that continuation to the upside. So whenever price came into these areas, we noticed that we created a lot of equal highs. And retail continued to short this. And this is where it got very interesting because as we were coming down into these areas of demand, we just continually created clean highs and clean lows. And we would create a lot of sell side liquidity, and raid those lows continuously while leaving highs. So this is showing the absorption, right? That algorithms or market makers are possibly getting positions into these markets, buying up positions here, buying up positions here, right? Buying up positions here, confirming they're buying up positions here, confirming with demand, break a structure to the upside, buying up positions here, buying up positions here, buying up positions here. So we can see the sell side liquidity that is rated and start to see them enter the market due to them leaving highs and manipulating lows with clean highs and clean lows, right? Everything is being taken care of on these moves to the downside. Same exact thing on this move to the upside right here. Why did price come down and raid these areas? Well, we left an imbalance, right? We left a zone of demand from a low that caused a new high. We are looking for that move to the downside. For that continuation, let's go ahead and take some of this off. To fill these areas and then break structure to confirm, right, that algorithm's entered on this move right here. What happens? That happens, we get the break, and then we get the continuation from that. So retail is shorting this over, right, and over and over again, setting their stop losses above these highs. And what is this doing? This is creating liquidity that is available to be grabbed easily, right, once we get that break of structure. So once we get this move here, and then we get the break of structure here, what happens? All of this liquidity, and then the next unmitigated area, price's next objective point, is reached. So every short that is getting in on this zone here, on this zone here, right? On this zone here, you're trying to find excuses, trying to make up, right, a reason for price to move to the downside within your rectangle. But what tells you that your rectangle holds, right, the effectability or the reasoning for price to move, right? Your rectangles aren't going to move price. We need to understand how price moves and how we can get into areas where we can protect ourselves, right? Which is shown with the early buyers and early sellers. Once the early sellers are then all taken out, so all of this sell side liquidity is purged. You can see all of these equal lows that I have marked right here. Once the early sellers are taken out from this impulsive move to the upside here, price mitigates the sponsorship from this original breakup structure. We now have the availability to now take out the all this liquidity. We have the fuel to continue and move to these areas that are unmitigated with supply. So once we come into this area again, this is very important too, right? We understand that we are still creating now more liquidity, right? As price comes into these areas from equal highs that are created, whatever trend lines, whatever it is that are created. So I want to look for the absorption of the supply zone. How can we see that? Now we see that, right, with the same exact thing we were looking before. Clean highs, clean lows, a lot of buy side liquidity, a lot of buy side liquidity, a lot of buy side liquidity. What happens? Price comes out, takes out all of the early sellers, respects this low that caused this high right here. This was the original low. Price came up, made a higher low, made a higher high, and then from that came back down, respected this low right here, and from that we got that continuation. And now all of this liquidity is available, and price can just shoot, right? And we get those large moves, and we get those imbalance fills, and from that every single retail trader, right, who is in over here, all these equal highs that were available, right, are now taken out of their trades with this move right here. What happens after that? We now start to move to the downside, right? So now that all of the early sellers are out, we can possibly be looking for some sell positions, but obviously structure is bullish. I'm going to continue to trade the trend until I am proven wrong. Because how I can be wrong, right, or I can be right so many times until I am proven wrong. But how many times will I be proven wrong? Once. Which is also another way to completely right quote unquote de-risk, because now you have this proven theory that once it is proven wrong, right, once my demand zone doesn't hold anymore, once it breaks structure to the downside, which was shown right here, I now have the availability to possibly look for the other side of the market. So I took a look at 88 earlier. Nothing had really changed with it, so I didn't feel too obligated to talk about anything about it today. But I wanted to show you guys that about Bitcoin and see how we can get into these situations where we won't be manipulated out of long positions, right? Because we understand that if price is respecting these lows that cause new highs, and we are showing everything, right? Everything from our plans is coming into fruition, then why are we not sticking to our plan, right? Stick to your plan until you're proven wrong. So that was Bitcoin, right? We have this area of demand that we had come into. We saw those two breakthrough structures upside. Candle before the candle that broke structure to the upside was here. This is the refined, I believe, 15-minute zone. Yes, the 15-minute candle before the candle that broke structure upside is here. We would draw that out like this. Price came into that area, and then on lower time frames, right? Broke structure to the upside once here. We get another structure break to the upside here. You might, or you now have an area of demand right here, right? That reaccumulation that caused price to push higher. Candle before that candle, right, is present right here. This is where that second structure break is, so you have one here. This high that caused a new low. We are looking for now this high to be broken to show that demand introduction. You have that there. Then you have the move away from that. You have price come into this area. This high that caused a new low on the minute time frame is broken to the upside. And then we see again that break of structure to the upside if we are looking for the last institutional candle, right, that caused that move. We have one present here for entries, or we can wait for further confirmation. We now have another high that caused an internal low right here that is broken to the upside. Candle before that candle is present right here. It is also an institutional candle, right? And then from that, we now have these opportunities, many opportunities that are available, and then prices taken higher after mitigating these zones of demand, showing the introduction after the liquidity rate to the downside here. And from that, we are showing our 4-hour structure is still bullish. This low that caused this high right here, we just filled this inefficiency. We could possibly come lower into these areas right here from this reaccumulation in this demand zone, and accumulate there and continue to the upside, or we can continue to respect demand within these areas. If that happens and we create more sell side liquidity, so we see something like this, and then price comes up into these areas, then I will be looking for more downside, or if price can come down into these areas and show more creation of that buy side liquidity that we were talking about, right, just as before, and then break structure to the upside after either rating liquidity to the downside here or here after mitigating these demand zones, then we will look for our trades and look for that continuation to the upside. Now, my personal style is very patient, right? Because I play the hourly the 4-hour to the 1 minute, but you guys don't have to trade like that, right? And what I mean by this is using this methodology is I can take, right, a 1-hour chart, a 1-hour range, and trade the 5-minute structure within that, or sorry, the 15-minute structure within that using 5-minute confirmations, right? So if I have a 15-minute range that is formed, an hourly impulsive move to the upside that is formed, and then price starts to move lower, right? It creates a high and a low, and then it breaks it once, comes up to that high, breaks it again. You now have an area of supply that is formed. And then it comes down to areas of demand, right? If I'm on a 5-minute time frame, and I receive 5-minute breaks of structures upside, that is now confirming my 15-minute, right, continuation, either higher low or higher high. In this case, it's going to be a lower low. So now I have a 15-minute trade availability opportunity, right? Price comes into those demand zones, goes higher, taps into my supply zone. I look for the 5-minute break of structure downside, and I can look to play that downside. So it doesn't have to be, right, that 4 hour to that 1 minute. Obviously, that 4 hour to that 1 minute is going to be, or not even the 4 hour, the weekly. So the weekly is going to be the most confirmation that is possible, right? But if you understand, if you are taking profits within that relative range, if you are playing an hourly range or a 15-minute range versus trying to play the 5-minute range and then taking profits at a 4-hour zone or doing something, right, you can't make that up at that point in time because it is not there. We are looking for the objectives that are there within that range. But with that said, that was pretty much everything that I wanted to get to you guys and get out to you guys. Just remember those M's and those W's. Remember that you can only control your risk, and remember you cannot control the markets, right? Only your risk. That's the only thing you can control, and you can beat it with math over time, right? Because if I am only losing half a percentage or 1% per trade, and then my next R&R is I end up hitting a 20 to 1 or 50 to 1, right? Because I waited and I was patient until that point in time came, then I could every the 5-6 losses that I had 6 days in a row are now completely wiped, and now I'm in 3-4 times more profit than I was before, right? And now we get this area where we can start to beat the markets, right? And that allows that profitability, that consistency, and as well as this recognition of this behavior over and over again will give us that robotic-like capability to enter trades without emotion and then hold to objectives. But thank you again for like everybody who came. This will be or this is recorded. This will be posted to the YouTube. Is there any questions or anything like that? Any charts anybody wanted me to look through real quick before I get this completely wrapped up? And if not, that is all good. But with that being said, right, I don't believe, like I was talking about earlier, ADA was doing anything. Yes, has not changed too much. Starting to create some sell-side liquidity before our demand zone that we had marked out at 0.465, which is a good sign. Starting to show me that early longs are getting into these or into this position right here, and we could possibly see a raid to the downside and then a move into this demand zone, continuation higher, what we will be looking for and looking to trade. Right now, nothing has been, or nothing is different from what happened before. We're just looking at this most current range right here, and from that, we will look for further confirmation. But thanks again, everyone, and I appreciate you popping out. Any questions, concerns, comments, go ahead, feel free to DM me. But with that being said, I will catch you guys later, and you guys have a great rest of your day and or night.